So we bottomed. The money's coming. Bitcoin's up, but like 25% off the lows already. And if you think back to 2022, after the FTX lows, we rallied 6x when Janet Yellen took reverse repos from $2.5 trillion down to zero. I think we're going to get in for a similar sort of move. I think this is our start to $1 million. Obviously, Bitcoin has outperformed gold if you want to look back to 2008. But at the end of the day, I think you own gold because the central bank's going to buy gold. You own Bitcoin because the retail population around the world is going to buy Bitcoin. But what are they trying to escape? The same thing. Too much inflation, possible collapse of the fiat post-World War II financial system.
Arthur Hayes gives investors who continue to follow antiquated financial playbooks a sobering wake-up call. He contends that in today's quickly changing macro environment, waiting for traditional signals like interest rate reductions or the resumption of quantitative easing is not only wrong, but also dangerous. As new financial paradigms take root, Hayes notes that the rules of the game have changed, and that those who don't adjust run the risk of falling behind. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
The Trump team took a maximalist position on tariffs, and that was thrown out the window with a week of bad market price action. And you had Trump walking back tariffs. Now he's even saying he's going to cut the China thing. You have Besson going on a tour of all the media outlets basically saying he's got a big ass bazooka and don't fucking doubt him. He's going to make sure the Treasury market's all good. You have a Boston Fed governor coming out and saying they'll do whatever it takes to make sure the market is properly functioning. And so we know that the bottom is in. They caved. They couldn't handle the stress of dramatically quickly changing the global financial system. Not to say it won't change over the next decades or whatever, but it's not going to happen in a quarter because these guys got to get reelected in 2026. So we bottomed. The money's coming. Bitcoin's up, but like 25% off the lows already. And if you think back to 2022, after the FTX lows, we rallied 6x when Janet Yellen took reverse repos from $2.5 trillion down to zero. I think we're going to get in for a similar sort of move. I think this is our start to $1 million.
How long do you anticipate us to be able to kind of have positive market liquidity and sentiment? And is this all still kind of striving towards more rate cuts as Trump has been pushing forward for?
I mean, I think the focus on rate cuts is a bit silly because people want to look into the past and say, okay, we know what happened from 2008 to 2019. It was quantitative easing. We know what it means. We know how it was implemented. We know the communication throughput and how that happened. And so we were trained over, a decade of, okay, Fed prints money every week. We go and buy stuff and it goes up, right? And it's just that easy to make money in financial markets. But then obviously everyone caught on to the game. Like, oh, this is inflationary. Quantitative easing means inflation. Inflation means I don't vote for the party in power. Therefore, it's bad to use the term quantitative easing. Like the normal people know what that means, which means it's time to change the game. And so people who were looking for QE missed 2022 and the end of the year when Janet Yellen wasn't technically QE, but it was very similar. Money was created in some way, shape, or form. And stocks, crypto, gold, everything ripped over the next 24 months, right? Up until the Trump inauguration. And now again, people are like, oh, when's Powell going to cut? When's he going to do QE? Okay, that's 2008, 2019 paradigm. Now we have Treasury buybacks. Again, it's not as straightforward as quantitative easing, but it accomplishes the same thing, handing more leverage to those who can buy Treasury bonds. There will be more trillions of them issued because the U.S. government runs a massive deficit. Therefore, money will be created. Again, it's not as straightforward as 2008, 2019, but it's the same thing. So I think if you're waiting for Powell to cut rates or restart QE, and that is what's the signal for you to jump back in the markets, you might be waiting and the rally, Bitcoin might be at 500,000 before you get that signal that, oh, okay, God, now it's time to do the thing like they did in 2008. So I think we need to be mentally flexible and understand that it really all boils down to volatility in the bond market. And the best proxy for that is the MOVE index. If you don't have real-time pricing, it's published every day at the end of trading hours in New York. And if you look over time, pretty much when it gets above 140, almost immediately policymakers do something. So April 8th or 9th, intraday hit 172. A few hours later, Jamie Dimon's on TV and CNBC excoriating Trump for this tariff thing. Trump immediately walks back tariffs. 2022 in September, MOVE is above 140. Janet Yellen shifts issuance of bills for bonds, and we start rallying. And I can go back over a bunch of other financial crises and show you 140-ish levels and move. Policymakers immediately react, and that strike price gets lower and lower as the leverage increases. It increases in the system, and so Trump is a very volatile politician. That's his style. He likes to throw shit against the wall, see what sticks, and change. That means more volatility in the markets. Bitcoin loves volatility. We will do well. I don't know what the policy is. I don't care what the policy is. He's just going to try stuff. It might work. It might not work. We don't care, because at the end of the day, as long as volatility goes up, we make money, because we know that authorities cannot handle it because of all the leverage embedded within the financial system. It's just that simple.
How can central bank officials in the Middle East or Asia be certain that their U.S. dollar assets won't be frozen next? According to Arthur Hayes, nations with trade surpluses are hoarding gold in large part because of this growing worry. They are gradually moving away from the dollar and towards safer assets like gold and eventually Bitcoin, but they are not completely abandoning the currency. The growing deficits in America are further fueling this trend. Spending cuts have been discussed, but the U.S. deficit is still rising by 22% over the previous year. According to Hayes, the path for steadily rising deficits is already established because neither major party wants to alter entitlement programs. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
Price is what you pay, value is what you get. It's all about what price you pay. EtherFi 55 cents, yeah, outperforms Bitcoin if they do what Mike says they're going to do. EtherFi at some ridiculously high other price will not outperform Bitcoin from that point onwards if they do another billion of revenue, which is obviously much less percentage gain off of a higher base, right? I think so. Yes, anything can outperform Bitcoin. Is what price did you pay for it, and then what was the change in revenues over that time period? So I think that's how you have to look at it, not like in an absolute sense. Does this outperform better than Bitcoin? And so I think a lot of these tokens that are, earning real revenues that are not sort of appreciated for that fact have the ability to outperform Bitcoin when we get the alt season or fundamental season or whatever you want to call it, when the Bitcoin dominance peaks in this part of the cycle, and then some of those tokens and projects really start spiking in price.
And before we get into alt season and everything that entails, would you say Bitcoin dominance has peaked for this part of the cycle?
No.
Okay.
I don't think so. I think that the folks who didn't get smoked in meme coins and all the other past alt season, obviously they're institutional investors or have family offices or high net worth, whatever it is, right? Because now Trump has shattered this illusion that there's this American exceptionalism, this paternalistic empire that's looking after people's capital, but is now just looking after, the base voters who got this person into office, then I think these people are going to start to understand why Bitcoin exists. They're going to start to appreciate gold more, and they're going to buy less NASDAQ, buy less treasury bonds, buy less bonds, buy less of everything, right? Because now there's this, oh shit, things are changing. I don't know what that change is going to mean, but I had it so good in the last situation. I might not have it so good in the next one. Let me buy something that is not correlated with the establishment persisting in its current form. However, different groups of people buying it, right? So if we want to take a look at when gold really started to catch a second wind here in this bull market, it's February 2022, when the United States government decided to steal the money of the largest commodity producer in the world. And basically they're saying these treasuries, things that you own, there's no property rights in America, there's property privileges. And you're allowed to own these things if we like you. And if you do something we don't like, then we're going to steal it. And they stole Russia's stuff, right? And so if I'm a central bank manager and I just watch them steal literally the largest commodity producer in the world, who makes the most, base things that help us live this civilized life, and the empire stole it, why do I want to own the claims of that empire? So again, I'm not going to go out and just dump all my treasuries because that's just dumb. Okay, well, if I'm generating more dollars on the margin, I'm going to be inclined to either buy stocks or buy gold. And that's what they've done. Pick your central bank who runs a current account surplus, and I'll tell you they're buying more gold than they ever bought in the last 20 years. That's the gold story. Obviously, Bitcoin has outperformed gold if you want to look back to 2008. But at the end of the day, I think you own gold because the central bank's going to buy gold. You own Bitcoin because the retail population around the world is going to buy Bitcoin. What are they trying to escape? The same thing. Too much inflation, possible collapse of the fiat post-World War II financial system. So the assumption is that the federal deficit continues to rise. Now, if you look at the most recent Treasury monthly statements of the U.S., the fiscal year, which starts in October, October to March of 2025 versus October to March of 2024, spending is up 22%, or the deficit is up 22%. So this is in the face of 2 months of Elon Musk's Doge, and in the face of all these government programs being canceled. The deficit is still rising. And so I make the assumption that it's going to continue to rise because that's just how the U.S. government has been structured. And, I don't care what stripe of politician you are, it's political suicide to really go hard at some of these entitlements. You can cut around the edges. And as we've seen Doge, they said they were going to do $1 trillion. Elon walked it back to 150 billion. And now he's out the door in a few weeks anyways, to go back and try to resurrect the Tesla stock price. So deficit increases. Who funds the deficit? We just talked about how the U.S. stole Russia's money. And if you're a central bank manager, we don't want your money stolen. So you don't make the problem worse. You don't buy as many treasuries as you would have bought otherwise. You buy other things. So we don't have foreigners buying at the margin. We don't have the Fed buying at the margin. They're actively reducing their portfolio of treasuries. And the private sector, people in America, are broke, right? They spent all the stimulus money on goods and services, and that economy the money is run out. So who's left? Well, these hedge funds showed up, starting in mid 2022 with a basis trade, which is I buy a cash bond, I sell a futures contract, I earn a bit of a spread, I highly leverage that trade, and I make good money. Now the more leverage I have, the more I can buy. And so that helps the Treasury fund itself because they don't really care what the yield is. They're going to buy the bond because it's trading at a discount to the futures implied price. So if Bessent can allow these group of individuals to buy more at auction, then he can increase the issuance of bonds. I mean, he has to increase the issuance because the deficit continues to rise. So that's really the mechanism here. As long as they can provide this balance sheet that sits in the banking system by changing the rules or alleviating some of the stresses, then these group of hedge funds can buy more bonds at auction at prices that are affordable to the U.S. government. So that's the mechanism by which the Treasury buyback, which in and of itself adds no liquidity to the system, helps the well-functioning of the Treasury market and helps Bessent issue more bonds.
Got it. So it's not necessarily issuing more liquidity, it's more so issuing bonds, and they're able to do that because there's more leverage in the system.
Correct.
Got it.
Arthur Hayes depicts the current global financial revolution in a disturbing manner. Central banks all around the world are starting to reconsider where they hold money as confidence in American financial dominance declines, particularly in the wake of the United States' 2022 asset freeze on Russia. According to Hayes, surplus countries are gradually growing their exposure to gold and eventually Bitcoin as a hedge against geopolitical risk and U.S. economic instability rather than abruptly selling off U.S. treasuries. The message is clear. Ownership is no longer a right that is guaranteed. Rather, it is a privilege that is awarded depending on political alignment if the United States has the authority to remove assets whenever it pleases. Because gold cannot be frozen or confiscated, central banks like it in this environment, but institutions and individual investors are increasingly using Bitcoin for the same reasons. At the same time, Hayes highlights that despite government program cuts, the U.S. fiscal imbalance is out of control, increasing by 22% annually. The structural growth in debt is effectively locked in since neither political party is willing to address entitlements. Additionally, because foreign buyers of U.S. debt are becoming less willing, the Fed is reducing the size of its balance sheet, and American families are mostly depleted. Hedge funds are increasingly supporting Treasury auctions through the use of leverage and arbitrage tactics. The bond market may continue to operate in the near term thanks to this delicate mechanism, but it won't address the underlying issue of a system based on unmanageable debt and eroding trust. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.